Good day, ladies and gentlemen, and welcome to the Ergomed 2020 interim results. Your host for today is Miroslav Reljanovic, Executive Chairman of Ergomed. At this time, all participants are in listen-only mode. Later, we will conduct a question and answer session through the phone lines, and instructions will follow at that time. Participants can also submit questions through the webinar platform, which will be answered by the company at a later date. As a reminder, listeners should join the call through either the webcast or the phone lines for the best viewing experience. This webcast will be recorded and available on demand from the LSC and Ergomed website shortly after the event. I will now hand over to Chairman Miroslav Reljanovic to open the webinar. Go ahead, sir.
Thank you very much. Good morning, ladies and gentlemen. I would like to thank you for attending the meeting and presentation of Ergomed H1 results for 2020. So may I get the next slide? Please go on. So the presenters today would be Richard Barfield, our Chief Financial Officer, and myself. Thank you. I would like to remind you on a vision of our company, which is developing the company in global specialized leadership in a highly demanded area of medical needs like orphan drug development and oncology, as well as safety of drugs, which means the services and system of pharmacovigilance. So please, next slide. On this slide, we present our headline information on H1 this year. As you can see, we experienced the growth in all areas of business in these challenging times. Our service fee revenue grew 26%. Our Northern American revenue grew almost 80%, and this is obviously augmented by acquisition of PV Asheville business in January this year. Our adjusted EBITDA is 40% up compared to H1 last year, and we grew the number of employees for 14%, and by now we employ 1,000 employees, which is a big milestone for us as a company. So thank you. Can we move to the next slide, please? Here we present the highlights of our business, focusing particularly on the resilience associated with the COVID-19 crisis. As you have seen, we had excellent financial performance in first half, which is mainly driven by fully focused service business model, what we introduced since last year. We experienced a very robust response to COVID pandemic crisis in business and basically operational management of our business. And we experienced resilience in both PV and CRO performance, what we are going to elaborate on the following slides. We successfully acquired early in the year and integrated particularly Pharmavigilance USA, former Pharmacovigilance Asheville business, and we managed very strong sales performance across the business in spite of crisis. So please, let us move to next slide. Regarding Ergomed's response as a company and its resilient response to the crisis, in fact, the main drivers of that is service in PV and CRO business are under long-term contracts, which is very important, especially in this kind of situations. And we are dealing and we are engaged in essential medical research, particularly oncology and rare, as well as pharmacovigilance requirements are mandatory by law, by regulation. So this just continues in any kind of circumstances. So these are basically, by our opinion, the main drivers of the resilience of our company in this kind of situation. Also, we've done, from operational and technical point of view, very smooth transition to remote working in both pharmacovigilance and CRO business. and we managed well management of our cost base as well as cash. Yeah, what you will see in financial slides. We got very early engaged in COVID-19 studies, with one of the first studies in the world started in Bergamo, which we reported in the results in March, as well as we got involved in some other trials, and we currently manage around 7 studies in COVID-19 across pharmacovigilance and CRO business. So please, next slide. So on the next slide, we present our executive management team. So let me say a few words about the strength and depth of Ergomed's management. This is a key factor in the sustained strong performance Ergomed has shown over recent times. In addition to myself and Richard, who are on call today, in Roy, our Chief Commercial Officer, and Sally, our Head of Regulatory and Clinical Delivery, we have 2 highly talented experts who operate across the business and really drive the benefits of cross-selling and operational integration. We also have in Gordon and John, the presidents of our CRO and PV business, respectively, 2 experts in their sectors with proven track records who are driving the resilient performance in both divisions. Yeah? So I'm really pleased to have such a strong team in place with the capability definitely to continue to grow the business and enable Ergomed as a company to fulfill its potential as a leading global provider of specialist services in the pharmaceutical business. Now, I will hand over to Richard, who will set out Ergomed's financial performance over H1 2020. Thank you.
Good morning, everybody. I hope everybody can hear me. I'm going to start by talking about the income statement for the first half of 2020, which is what you can see on the screen now. The revenues, total revenues were up 14.8%, and the service fee revenue was up 25.9%. I'll say a bit more about that on the ensuing slides. That takes out, obviously, the distraction of the pass-through revenue. And as I said, that shows service fee up 25.9%. Looking at it on a like-for-like basis, so this is excluding things like the one-off in the first half of last year and then the acquisition of pharmacovigilance this year, the like-for-like service fee revenue growth was 18%. Our gross margin grew from 41.2% to 45.8%, and the adjusted EBITDA grew from 6.5 to 9.1 million, a growth of 40%. Net cash finished the first half at 14.1 million, and the order book grew by 28% compared to where we were at the end of the first half of 2019. And since the beginning of the year, since the 1st of January 2020, the order book has grown by 22%. We are now reporting an adjusted basic earnings per share. We're trying to be a bit more transparent about this, and you'll find some detail on this in note 3 to the statement that we published today. That number is 11.3 pence for the first half, and that's up 17.7% compared to this time last year. We can go on to the next slide, please. So on this slide, we're looking at what is happening with our revenue and our gross margin if you take out the distraction of the pass-through revenue. So from the first half of 2019 to the first half of 2020, the pass-through revenue went down from 5.9 to 3.5 million. To a large extent, that was COVID-19 related, to do with access to sites and monitors and investigators and so on. So if you remove that and look purely at the service fee revenue, this is the picture that you get. So on the left-hand side, you can see the pharmacovigilance business, which went up from 15.8 to 21.6 million. That's 36% on a like-for-like basis, and 62% on a basis that includes the acquisition of Prime Vigilance USA. In the CRO business, the service fee went down 6.7%, as we reported in the statement this morning, which, all things considered, we think that's a pretty good result. Certainly if you look at other CROs, other competitors in the sector. And to a large extent, we believe that that is driven by our focus on essential medical research in the areas of oncology and rare disease. Now, if you look at the right-hand side of the chart, this shows you what is happening with our service fee gross margin. So again, excluding the distorting effect of the pass-through revenue. And the story that it tells here, I think, is a very good one. It shows you the the gross margin in the CRO business, going up from 43.7% to 46% on service fees, and in the pharmacovigilance business from 47.8 to 51.9%. So on a like-for-like basis, service fee only, a good revenue and gross margin performance. Could we have the next slide, please? We thought it would be interesting. We've spoken on previous calls, in previous meetings, about the transition away from the former co-development strategy, which the company had, and the focus on full service revenue with third-party clients. And I think this slide shows very graphically, very clearly, how we have made good progress in that strategy, and we're pretty much through the co-development work now. You can see that from 2019 to 2020, co-development as a proportion of our service fee went down from 34% to 10%. In the meantime, the third-party service fee went from 66% to 90%. And clearly the benefit of that is that the third-party service fee is done at full margin. The payment is fully in cash. There is no payment in kind associated with it, and that's part of what you're seeing coming through strongly in the improved gross margin performance. We can move on to the next slide, please. So we thought this would be a very interesting slide to put up, because it shows you the development of our business geographically. So if you've got the large blue segment of the pie on the left-hand side, this is the North America revenue. So this is based on total revenue. And it shows you that in North America, our revenue in the first half of 2019 was 33%. In the first half of 2020, it's up to 52%. So this is revenue by client location. And this is showing you that we have more clients in North America. You may recall that we, with the acquisition of Prime Vigilance USA, we acquired 40 more clients. It also, to an extent, speaks to the reduction in co-development, because those clients tended to be more European. We have a strong business development team in North America who are doing a great job, and we'll be speaking later about the impact of the cross-selling, which we're continuing to enjoy success with. And basically, this is showing you that the North America market is an extremely important one for us. Could we have the next slide, please? Now we're looking at the growth in the order book and sales. So this is showing you on the left-hand side the growth in the contracted order book. And just to remind everybody, the contracted order book is the future contracted committed revenue stream on the long-term contracts in the pharmacovigilance business and on the clinical trials in the CRO business. And the order book, as I mentioned earlier, is up 28% year on year. Some of that is due to the Prime Vigilance USA acquisition, but basically this is a good performance in the growth of the order book. And on the new awards, you can see that compared to the first half of last year, we're up 22.9%. So we did achieve our sales targets over the first half of 2020, and that puts us in a strong position to start the second half of the year. Could we have the next slide, please? This is a very simple, but I think very helpful way of looking at our cash flow over the first half of 2020. It's a very simple story. You can see here in the chart on the left-hand side that we started at 14.3 million, we finished at 14.1 million, and that includes 8.1 million cash outflow on the Prime Vigilance USA acquisition. That's both the acquisition cost and the professional fees associated with that. So then there are some puts and takes on working capital and capex and so on. But the operating cash flows, pre-working capital of 9.2 million, basically earns back all of the cash that we spent on the Prime Vigilance USA acquisition, and brings us back to a closing position, which is basically back to where we started. So very strong cash flow performance. And you can see the same thing over on the right-hand side. Month by month, we're generating on average about 1.5 million of cash, and that very quickly pays back the Prime Vigilance USA acquisition. Can I have the next slide, please? And then finally, I will just talk about the proposed capital reduction, which you will have seen a reference to in this morning's announcement. So when you look at our balance sheet, we actually have a strong balance sheet. So on the asset side, we have net assets of 36.8 million. At the half year, that was around 44 million. This is the picture at the 31st December 2019. But then when you look on the funding side of the balance sheet, you see a deficit on the retained earnings reserve. And within the parent company balance sheet, this is a deficit of 30.3 million. So what we plan to do is to take the balance on share premium account and merger reserve, transfer those across to the retained earnings reserve. This is a well-trodden path. It's a standard process. It's part of, if you like, the good housekeeping of putting the company's finances into order. It does require a shareholder approval and then a court approval, but as I mentioned a second ago, it's a well-trodden path. A circular will be issued on this within the next couple of weeks, and we expect this to be completed before the end of the current financial year. So that completes the financial slides, and I will now hand back to Miro to take us through the operations. Could we have the next slide, please?
Thank you, Richard. May I just check, can you hear me well?
I can hear you fine, Miro.
Okay, thank you. So on this slide, we present you some key elements of the resilience of Prime Vigilance business. Obviously, in this presentation, we focus very much on the resilience of our business and business model, yeah, which is obviously key in this situation, yeah. So as you know, Prime Vigilance is a regulatory requirement, and this must be conducted in any time, even during pandemic, obviously. What we achieved was a really seamless home working model with over 90% staff who work at home currently. And this was allowed by excellent IT and telecommunication infrastructure, which was developed obviously systematically over last years, and then we've been in very good position when it started, when this situation started, yeah. What is interesting, in fact, that we improve productivity in some elements of business, particularly case processing, as basically we've been simplifying as much as we could some processes. The situation pushed us in that direction, frankly speaking, and we've been able to manage the increased workload, especially in Q3, without additional headcount, and obviously not jeopardizing any quality and stuff around that, yeah. And what is important to be said, that we started to employ backfill positions again during the summer, which obviously resulted in further recruitment of our staff. Yeah. Please, can we move to the next slide? This is very simple presentation of something which is very strategic in our development. We presented initially this digital transformation initiative in spring. And I can brief you that this is going well. We signed with Automation Anywhere and Data Robot, which are the leading global companies in information digital transformation. Strategic contracts where both of these companies work with our team of experts on automation and digital transformation of our pharmacovigilance processes. That was supported a lot strategically by our board director, Michael Spiteri, who is a chief data officer of HSBC, and he obviously went through that process from strategic and operational level in banking industry. So we are leveraging on that experience and strategic advice, what I want to stress at this call as well. Yeah. What is basically happening that the team consisted of these three parties are working on first phase, which is focused on robotic process automation to digitize simple adverse event reports, which ought to be completed by end of the year, and will become alive early next year, which will be offered to our clients for some of their process management, adverse event management, as well as it will be offered to the market. We believe that would create further competitive advantage as well as further efficiencies. Yeah. The next phase, which will start from next year on, is machine learning deploying on more complex reports as precursor of a full case processing. Obviously, it will always be an element of human supervision. So this is called, there is a term called intelligent automation. So where our professionals and we are a fortunate situation that we have really a lot of medics and pharmacists, very educated people who would sit on top of these automation processes, but that would obviously bring us to higher efficiencies, as well as also we would be able to process many more data than we do now. Yeah. And strategically thinking, we will be able to compete with some really low-cost markets with this initiative, and this low-cost market, particularly in pharmacovigilance businesses, India. Yeah. So let us move to the next slide. This is a slide summarizing our acquisition, which happened early in the year. PV Ashfield, which was rebranded immediately to Pharmacovigilance USA. Our team has been working very systematically on operational integration in the area of business development, also technology, support functions. And what I would likely to also stress that we got strong synergies from management integration. We got some people from PV USA who got even global positions in pharmacovigilance business, like HR, like a lady who is running that business became also global head of medical information. So, and also what is obviously always very good sign that the team stayed there. We had a minimum turnover, which is, I think, great sign that integration went well. Yeah. Apart from that, on the right-hand side of the slide, we have financials, which also are quite strong, I think, and these are financials just for first half of the year, where the total, so basically the total contracted amount was in the range of 5.6 million, which was influenced by our US presence in pharmacovigilance. Yeah. So clients got more confidence in the business. Also, our US pharmacovigilance could offer European operations, especially quality person, so-called QPPV, quality person for pharmacovigilance, where we have the strongest network in Europe. Yeah. All that resulted in new clients contracted 4 million and some other elements of business which came in, and we believe that this trend will continue. Yeah. On the other side, we got also pipeline in the amount of 11 millions from repeat clients, from new clients, and so on. So all these financials really presents, we believe, that this integration was targeted well, as well that integration was managed properly, even without being able to be present in Q2 in the States as well as now. But things are going very well. Yeah, I can assure you about it. So next slide. Next slide describes the resilience we experienced in CRO business, yeah, and what have been the drivers of that. I'm going to present you also a couple of examples of some trials which have been running during this crisis in different indications, yeah. So firstly, what was the impact on the business? Regulatory restrictions and holds, yeah. Obviously, the COVID-19 studies have been prioritized by regulatory agencies and bodies, and that created delay in obviously the other indications. Yeah, but our approach was this unique regulatory intelligence tool, which was specifically developed by Sally, Emanuel, and group. Yeah. Which ensured agile approach, to regulatory changes during this time, and allowed us to move fast from regulatory point of view. Yeah. Then obviously the management of centers and the general logistics was quite jeopardized, especially in Q2. Yeah. Hospitals have been closed down. Shipment was very jeopardized, etc. Yeah. As you know or might know, we have very unique site management model, yeah, where we support the sites. We have contracts also with some nurses at the sites in many hospitals, and the other supportive staff, which allowed continuous communication with the sites. That was probably the most challenging, to stay in touch. Even if you cannot come in the hospital, just you stay in touch with the staff, yeah. As well as we have been in touch with investigators, and they've been working on all kinds of support which is needed to support the trials. Obviously, the advantage of our model is that we are working in a highly medical need research, which is oncology, rare diseases, and also we've been involved in some COVID trials. So it allowed us also that we continue to work in this situation. Obviously, the significant drop in monitoring services happened due to hospital closed down, but we've been approaching this issue firstly with remote monitoring tools, what we developed much earlier than pandemic happened. But also, even more important, we have a hybrid model where we subcontract quite a lot of monitoring staff all over the world, and we could flex this model quite fast, so that saved us quite a lot of money, and and maintained the gross profit even in CRO business on a very high level. So next slide. These are three projects what our CRO team picked up as an example, and I think they're very nice example of what can be achieved even in a very complicated situations. Yeah, but you need to have really these elements mentioned before, and I think crisis pushed us all to think creatively and even do more on-site supporting, or even going to the patient's home, which is the newest initiative with research nurses. Yeah, but talking about the examples of some trials, first one is Israeli client. We can't name the company because of confidentiality. Indication is oncology, early oncology, phase 1/2, head and neck cancer. And the interesting stuff here is that we signed that contract early in March. I personally wouldn't believe, that this is happening. That somebody sponsor is ready to, client is ready to sign and start. Yeah. Obviously, they've been funded, you know, and we started the regulatory process in March. Got approvals, and this is study managing in the United States only. We've been getting hospital contracts approval by regulatory, and succeeded to enroll the first patient in within a half a year, which is basically normal timing, you know, for this kind of projects. Yeah. The project B is a US client. This is ulcerative colitis. We have already established about 60 sites in that study before COVID started in March. But what is important here, that in spite of all these issues with the hospital staff and so on, we have successfully enrolled in the last 6 months, since March to now, about 100 patients. And basically we are very close to enroll the full 195 patients. Yeah, so we've been able to continue recruitment in many of these sites even during this challenging time. And the third one is a Japanese client, our ongoing client for some time in the area of head and neck as well, oncology. And we succeeded to finish re-enrollment, because this study was running for some time. It was a big issue, big challenge. Are we going to be able to finish the enrollment in time? And we succeeded to finish enrollment in time despite these challenges. So these are just a few for you the ability and agility of our CRO business model. Yeah. Next slide, please. So this is our summary slide, which basically points out some key elements and key achievements during first half of this year. We obviously exercise continued strong growth in revenues and profits, as you've seen. Margins have been maintained in this market, especially I would say CRO margin, due to this flexibility we have in the business. As well as obviously PV stayed with very high margins in spite of remote work and so on. We did a rapid and successful integration of Prime Vigilance US, and we accelerated quite a lot US market. Yeah, we keep our leadership position in pharmacovigilance and building oncology and rare. And we believe that we have favorable market drivers on our side, and we've seen that during even this crisis, we've been very successful in sales, which is, I think, the best parameter for visibility of business going forward. Yeah, obviously we demonstrated resilience to the crisis, and we have management strengthened that really for future organic growth, but also for M&A growth and acquisitions. So thank you very much. We would appreciate any questions from the audience. Yeah.
And as a reminder, to ask a question, you will need to press *1 on your telephone keypad. And to withdraw your question, press the # key. Please stand by while we compile the Q&A roster.
Unfortunately, due to technical difficulties, Chairman Miroslav Reljanovic was unable to answer as many questions directly as he would like, so Richard Barfield, Chief Financial Officer, managed most of the answers on his behalf.
And your first question comes from the line of Stefan Hamill from Numis. Your line is now open.
Morning, everyone. So 2 questions from me. First one for Richard, just on the financials. It looked like a really strong bookings performance in the first half. Can you just clarify, was the sort of book-to-bill 1.5 for the period, and how does that split over CRO and PV? And just, you know, what's driving that strong bookings performance? Is it sort of win rate, or is it sort of number of RFPs that you're taking part in now? Thank you.
Yes. Morning, Stefan. Yeah, you're right. The bookings performance was strong. The book-to-bill was 1.5. It's slightly higher in the CRO business than the pharmacovigilance business. And to an extent, that's a bit of a technicality, because often on the pharmacovigilance business, you're renewing contracts, they're rolling over for an additional year, whereas typically the duration of an award that you win on the CRO side is longer, 18 months or even 2.5 years. So tends to be slightly higher, but they both performed strongly, both achieved their sales targets over the first half of the year. In terms of, sorry, what was the second part of your question, Stefan?
It's just, I just wanted a bit of colour there. Are you doing more RFPs? So is a sort of increased scale of the organisation allowing you to sort of bid for more type of work, or is it sort of win rate that's sort of benefiting and driving the strong bookings performance?
No, I don't think we're seeing any particular pickup in the win rate. It's clearly a question of volume. I mean, we've got a very strong team. We've added to the team. Miro was talking about Roy Oval, who joined us in about April of 2019. So he's been on board for 18 months, has put a very strong team together. We've got, across the USA, we have 4 or 5 people. There's an additional person who joined us from the Prime Vigilance USA business. So whether you're talking about the US or Europe, the team is doing well. And so we're not really seeing any increase in the win rate. I think it's the quantity and the size and the scale of the RFPs that we're dealing with.
Gotcha. Thank you. That's given us good colour. And then just on Prime Vigilance, I guess for Miro, the automation piece that you've been bringing in, is that significantly impacting the top line at the moment, or the margin at the moment, or is it more sort of future potential there?
Miro, are you there? Are you on? Stefan, we appear to have lost Miro. Can you hear me, Stefan?
I can hear you. Yeah.
Yeah.
Can you hear me now, Stefan?
Yes, we can hear you now, Miro.
Yes, I can hear you, Miro.
We are experimenting with some microphones, but okay. Thank you. Thank you for the question, Stefan. This current automation project is really development, and its investment relatively modest one, but what we do currently, and this is really more something what we expect in the future. Yes, I would imagine that as I told that it would drive some more interest from the market because this will be differentiator from the beginning of next year, as well as we would experience some efficiencies and which would obviously be reflected in the gross margins. Yeah. But just to not to go too high with the expectations, that would take a few years, to bring us to the real impact, and the stuff we do now obviously will be initial moves in this direction. Yeah.
I see. Thank you, Miro.
And your next question comes from the line of Max Herrmann from Stifel. Your line is now open.
Great. Thanks for taking my questions, and congratulations on what's been an excellent performance in we know it's a tough period for conducting clinical trials, particularly with COVID. A couple of questions, if I may. Firstly, just in terms of the dividend plan, obviously the restructuring of your retained earnings will enable dividend distribution. I wonder what your policy is intended to be on that. And then secondly, just in terms of the pharmacovigilance, clearly the Ashfield acquisition has been a great addition to the business. yet obviously UDG had failed to really drive growth from that division. I wonder whether there are other opportunities out there to do the similar thing and to replicate what you've managed to achieve in very short order with the Ashfield business.
Thank you, Max. Yeah, so I might maybe, there is a second question. I will leave it to Richard, the first one on dividend, yeah? So regarding the, PV Ashfield, that was clear to us that this is a great acquisition target, and we've been working on that with previous for some years. And
Mary, you're cracking up.
Replicated. Oh my goodness, it's unbelievable. I'm very sorry. Okay, can you hear me now?
Yeah.
Okay, Richard, I think you could reply both questions, please. Yeah.
Yes, of course, Miro. Thank you. Well, so on the first question, Max, good morning. Thank you for the invitation to... Miro, we can still hear you. Can you go on mute? So, Max, thank you for the invitation to make up the dividend policy on the hoof. I mean, what we're doing, what we're doing here is, this is just part of the normal good housekeeping, if you like, good management of the company. We're running this £30 million deficit on the PLC balance sheet, which is not healthy. Even if we were to decide that it was the right time to do the dividend, we couldn't do it because we simply haven't got any distributable reserves. So it's quite normal at this stage in the company's performance, I would say, just to sort that out and fix it, and that's what we're planning to do. As and when the time comes, if the performance of the company is right, if the general economic conditions are right, if the board so decides, then we will be in a position to pay dividends, and that may be something that we start to consider in due course. But for the moment, that decision hasn't been made. There isn't a formal policy, but when we get to that point, we will of course inform you. We'll consult with our shareholders, and we'll inform the markets. But what we're actually doing with this process is making sure that as and when that situation arises, we're in a position to do so. On pharmacovigilance, yes, I would say that the acquisition and integration of Ashfield has been a great success for us. We've done it rapidly and effectively. Operationally, it's all fully integrated. It's rebranded. You saw the figures about the increase in the opportunities that we simply wouldn't have got if we hadn't made this acquisition. So it's been a great success. Whether there are other opportunities out there, from our research into the market, we haven't found other companies of a comparable size which are specialist standalone pharmaceutical consultancy companies. We'll certainly keep looking, but we think the prospects of finding such another company are low. We are looking for opportunities both on the pharmacovigilance and on the CRO side. North America is clearly going to be a high level of focus for us, and you've seen the success that we've enjoyed and the rapid growth of our business there. It's essential to becoming or extending our position as now a global CRO and pharmacovigilance company. And that's really about as much as I can say at this point. We are active, we are looking, but as I've said previously, originating, conducting, concluding transactions in the current market conditions is difficult. And I think the flip side of that, as we've talked about with the investment in new systems and technology, the investment in organic growth, we will be looking at opportunities to do those, because we have the firepower and we now have the presence on the ground to do so. I hope that answers your question, Max.
Yeah, no, great. Thank you very much.
Okay.
And your next question comes from the line of Ankel Verma from Peel Hunt. Your line is now open.
Hi, good morning. Anshul here. Just 3 questions, if I may. One, can we please push you a bit more on the business development side? It was quite strong in the first half. So I'm trying to understand what were the main drivers of the strong growth. Was it opportunities created by COVID, the PV Ashfield acquisition, or just organic growth? And do you expect this momentum to continue going forward in H2? Second, there was a delay in some of the studies in the CRO division. Has this created a bottleneck? And do you see this reducing the number of new projects you can take on within CRO? And the last one, you spoke about good expansion in Asian markets. Is this something you will be focusing on? And perhaps would that be through an acquisition in the region? Thank you.
Miro, should I go ahead and answer, or have we got a good line with you now? Okay, I think we may have completely lost Miro, so I'll quickly do my best with those. Anshul, good morning. Thank you for coming along to our presentation today. I didn't catch the second question, so I may ask you to repeat that. But just to deal with questions 1 and 3, on the business development side, you asked about whether the growth in revenues and the development of the order book was to do with COVID-19, the PV USA acquisition, or whether it was organic. I would really put the accent more on the organic side, if I may, because we have continued to win business with existing clients. We've renewed contracts with on the pharmacovigilance side. We've rolled them over. As you know, we have a rollover rate or a renewal rate with our pharmacovigilance clients, which is typically in the sort of 95% range, and we've certainly seen that happening in the first half of the year. We have had a couple of major wins on the pharmacovigilance side in the first half of the year, as well as CRO. The impact of Prime Vigilance USA, I think, is more to do with integration and cross-selling. And as you saw on the slide, now having that global footprint, having the presence in the USA for our legacy clients, if I can put it that way, and having the presence in Europe for our newly acquired 40 Prime Vigilance USA clients, has enabled us to develop this sort of, if I can call it, a transatlantic presence and to develop there. COVID-19, I would say, has been relatively limited for us. These aren't huge trials that we've participated in. They obviously, starting in the second quarter of this year, there's been a limited time to build up a portfolio of COVID-19 related work, although that is continuing, and we now have an established presence, if you like, as a supplier in that market. So the emphasis, as I mentioned, is more on the organic side. In terms of the Asian markets, we are increasingly seeing that with our global presence, we are required to recruit in Asia. We're required to have a presence and have investigators, have patients coming from Asia. We've got work, for example, at the moment where we have a significant requirement for a presence in Japan. And that is going to be, it has to be part of our strategy going forward as we globalize. There may be acquisition opportunities. That's not our highest priority just at the moment. That's on the USA, as I mentioned earlier. But we would expect to see Asia continue to develop organically, and then in the fullness of time, we will think about opportunities for inorganic growth in Asia. And Anshul, your second question, I'm afraid I didn't catch.
Of course, thanks, Richard. This is very clear. So the last question, it was just on the CRO division. You had previously mentioned there were some delays in some of the studies. So just trying to understand, has this created a bottleneck, and will this limit the number of new projects you can take on within the CRO division?
Okay, right, I understand. Thank you. I would say no, it won't create a bottleneck. I think what we'll see, hopefully, if we don't see too much return of the lockdown, in European countries. We will see things continuing to ease. We will see the delays being caught up as we go forward. The speed of that catch up, I think, is very debatable. But we have the boots on the ground. We have the team, the project managers, the CRAs, the leadership team in place. That this won't create a bottleneck, and we will be able to staff up, and it won't stop us winning new business and being able to service the new business that we will. And I will just say this about the CRO business, if I may just digress for a second. When you look at the performance over the first half of the year, with the slightly reduced revenues that we've spoken about, the team there has just done a terrific job in making sure that in spite of that, our margins hold up, and as you saw on the slides, the gross margins have actually improved in the first half of 2020 compared to the first half of 2019. So the team there has done a really terrific job of responding to the challenges of COVID-19.
Great, thank you so much for answering the questions. That's very helpful.
Okay.
And your next question comes from the line of Charles Weston from RBC. Your line is now open.
Hi, thanks for taking my questions. I also have three, please. First of all, in terms of the trading to date, obviously you have very good visibility given the PV and the PV business and the order book on the CRO side. But can you just confirm that the trading in the last few months since the end of the first half has been sort of in line with the momentum seen in the first half, and what that might mean for consensus profit forecast, given you've already delivered more than half of the full year expectations? Second question is, given how fast the US is growing, I wonder if you could speculate over the next 2 or 3 years what that might end up being as a proportion of your total revenue. And then the third question is around the CRO industry in general. I'm not sure whether Miro's line is going to enable this to be answered, but question just with regard to pharmaceutical companies' demand for virtual studies, direct patient delivery of medicines, remote monitoring. Does Ergomed have the IT and the processes to be able to offer these sorts of services? And what could it mean for revenue per patient and margins?
Okay, I don't know if we've got Miro, so I will do my best. I'm not sure how good I'll be on number 3, but I'll do my best. On number 1, trading to date. Charles, I'm sorry, but we have to be a little bit careful, as I'm sure you'll appreciate, in what we say about the second half of the year. I will say that we have not, in the nearly 3 months of trading, we haven't had any adverse surprises. We've continued to trade in line with our own plans for the second half of the year, and we're comfortable with the way that things are going.
Someone has hold music.
Yeah, Chris, I can tell you that's Miro's hold music. You can call him.
Yeah, okay, he's gone. Yeah, fine.
Okay. Sorry. So the trading has continued in line with our plans. We're happy with the way that it's going. And regarding the consensus forecasts, I think we'll have to wait and see what the analysts say. I think H1 has come in, perhaps slightly better than what people were expecting, and there will be some extrapolation from that. But we'll find out in due course how the analysts respond to that. In terms of the growth of the USA and speculating on the proportion, we would hope and expect that growth will continue to be strong. We're increasing our presence. The Prime Vigilance USA integration has gone extremely well. We have a very strong team on the ground, and there's no getting away from the fact that about 50% of all clinical trial activity globally takes place in the USA, and the major CROs, the major pharmaceutical companies are based in the USA. So we would hope and expect to see some growth there. It will depend on our acquisition strategy. We've said quite clearly and openly that that is going to be the main focus of our acquisition efforts. So we'll have to wait and see with that. And then on the CRO industry in general, this one's perhaps a little bit above my pay grade, but I will just say that we're very conscious of the trend towards remote monitoring and virtual studies. We're looking very closely at that. It's too early to say anything in much detail, but I think any CRO right now has got to be focused on those trends and has got to be thinking about what could be the implications for our business, and we're certainly doing that.
Okay, thank you.
And again, if you would like to ask a question, press star then the number 1 on your telephone keypad. Our final question comes from the line of Jonas Picolis from Edison Research. Your line is now open.
Hi, good morning. I suppose I have only one remaining question, and a short question is, as we approaching winter months and infection rates are picking up, so there's chance that we will see increasing restrictions in Western markets. So I guess I would be interested in your views. Is there a chance that we will see similar disruptions to the CRO industry that we've seen earlier this year, or you think this time would be different? Just your views, because you have inside experience with the industry.
Sorry, can you hear me?
Yes, we can hear you, Miro.
I can.
Firstly, I would like to apologize everybody. I don't know what was happening, but I'm sorry for this. Yeah. Sorry, what was the question regarding the industry? Sorry, I got lost.
So it's a short question is, as we are approaching winter and the infection rates, coronavirus infection rates are increasing in Western markets, and there's a likelihood that the restrictions or lockdown measures will also be put in place. So what are your views on the next 6 months? Are we going to face similar restrictions or disruptions in CRO industry as we saw earlier this year?
Yeah, it's obviously it's very difficult to predict, but I think that healthcare system consolidated over the last half a year quite a lot, yeah. There will be disruption for sure in the market of clinical research because of all the issues we discussed earlier. But talking about us particularly, we are really working in the area of a high medical need like oncology rare. And we don't believe that there will be significant disruption really in this market. And these examples, what I showed you, speak in this direction. Yeah. So that's our view. Yeah, regarding this. Yeah.
Okay, that's clear. That's actually all from me, as my other questions have already been answered.
And there are no further questions at this time. Mr. Miroslav, I'll turn the call back over to you.
Thank you very much. So thank you for the participation at the call. I'm very sorry. I would like to apologize for the technical issues I had. I've been able to listen to the discussion. Thank you, Richard, for taking a lead, and I think Richard positioned well the questions and positioned well the answers. So thank you very much for the questions and for lively discussion, and hope to stay in touch with all of you in next period. And thank you for all continuous supports from your side. Thank you.